morning. It is Tuesday. I was going to say Monday, but it's September 3rd. It feels like a Monday. It's a Tuesday that feels like a Monday. It's weird. I hope you had a good Labor Day. I went to IHOP. I love IHOP. And if you haven't been to an IHOP recently, I mean, I don't know if it's my personal IHOP, but every IHOP that I go to, so I do travel with Major League Soccer every now and then. I've got a trip coming up in December. I'm doing the finals, I think. But, you know, I usually go to IHOP. Before I go to the stadiums, I go to IHOP, and I love IHOP. And then this particular IHOP in Austell, Georgia, which is just outside Atlanta, the staff is fantastic. So I leave them good tips. I try and, you know, when somebody gives you good service, it's priceless. So even if you have a $20 or $30 bill, leave a $10 tip. It's not going to change your life. It's not going to make you poor. If you're listening to this podcast, I've made you $10. You can afford it. Give them the tip. Because again, you know, I make enough money doing this podcast. And, you know, those of you that watch YouTube could probably figure it out. But one thing that I wanted to bring up is Webull. Webull is impressing me. They are having things called the Webull webinars. And one today at, I guess, 1 o'clock. 1300 Eastern Time. Join us for a webinar with State Street Global Advisors as we explore essentials of exchange-traded funds, ETFs. This session will provide a solid foundation on the basics of ETFs. They sent it to me as a Webull subscriber. If you don't have Webull, I have Fidelity as my main brokerage. But I've been impressed with Webull, not to the point where I'm taking out my 7-8 figures in Fidelity and putting it into Webull. But I'm happy enough to have, put $1,000 in there. It's worth $8,000 today. I put it in January 1st a couple of years ago. But if you want to sign up for Webull, sign up on the fourth link. You get free stocks. I use it as my sports betting. So instead of sports betting, I bet on stocks. I do far better on stocks than I do on sports betting. But I have been impressed. Webull, the app is phenomenal to trade in. I did on Friday live on air. I bought Berkshire at its all-time high. And so, let's talk about the markets at all-time highs. I'm going to get out of that one. But, it's time for our quarterly look at Bob. Okay, Bob, if you don't know, there's a story of Bob. I will link to it in the newsletter. The newsletter during the week is 100% free. The newsletter's right here, dailystockpick.substack.com. You can get to it free, and I will link to that. I only charge on the weekends where it's a little bit more in-depth and a little bit more educational, and there's some stuff coming up on the paid newsletter, folks, so, one-on-one type of stuff. But again, let's check in on Bob, and I'll include this link in the newsletter. So Bob, the world's worst market timer, and you say this all the time, you hear this, you can't time the market. So you can't time the market. So we're at all-time highs now on VOO. It's pulling back a little bit. But Bob is the worst trader. So, and it goes back to the 1970s. And the feeling that you have today about the feeling, oh my God, it's at the all-time highs. And should I invest? Should I buy more? Whether it's a stock, whether it's an ETF, whatever it is, the feeling is the same. The point that this article and that the Bob story makes is that if he just kept investing, even though it, like 1974 to 73 to 74, the S&P dropped 50%. Bob had invested his life savings at the peak just before it fell. Bob was bummed. Bob had a plan. He was sticking to it. He got fear. So Bob kept saving $2,000 a year in the 70s and then $4,000 a year in the 80s. But he was feeling the sting of his last investment, did not feel comfortable adding to his thing. In August 1987, Bob decided to put 15 years of his work to saving. Seriously, the market fell 30% right after that. In 1987, Bob was planning to wait it out. In the late 90s, everything was on fire. The internet was unavailable to new technology and stocks were flying. Unbelievable. By 1999, Bob had accumulated $68,000 from saving each year. A firm believer that Y2K bug was baloney, Bob invested his cash in December 1999 just before a 50% decline in 2022. Again, Bob invested, but he stuck in there, okay? That's the point. Even though these big things, he kept investing, and it's in VOO. It's in SPY. He's just doing S&P. That's all he's doing. He's not buying individual stocks. The next big buy decision came on October 2007. Would be one more big investment before he would retire. He saved up $64,000 since 2000, deciding to invest this right before the financial crisis. Bob saw another 50% decline. Monkeys throwing darts were probably better at this than Bob. Distraught and disheartened, Bob continued to save each year and accumulated up $40,000. He kept his investments in the market until he retired in 2017. Let's amount invested, $184,000. He ended up with $1.1 million. So while he saw those 50% declines at the peak, Bob, while he was still investing and he didn't dollar cost average. He just bought at the peaks. So the point of this is to say time in the market is more important than timing the market. And VOO, I'm going to start it off with VOO. I usually start with the Qs, but VOO, this is the S&P 500. It is beating the Qs for the year. And while we're at all-time highs, I want you to remember, a bull market will always make people look like geniuses. That's important to know because, again, I don't consider myself a charlatan. I try and be as honest and as authentic as I can. But if I tell you, I guarantee you this market is going higher, I'm only talking about historical nature. And that's what the story of Bob is. It's just historical nature. Time in the market has proven that you do better than timing the market. And people who are out there telling you, you've got to buy these buy signals, you've got to do this, you've got to do that. You can't time the market. And individual stock picking is incredibly tough. Now, a bear market may make others look like geniuses. They're not. Remember, Michael Burry has called the greatest crash of all time, but he's been calling for a crash ever since like 2 years ago, and we're in a bull market. So don't be swayed by somebody on the internet. The long-term trend of the market is up. Always remember the long-term trend. You just want to try and optimize things, but getting out of the market is a fool's game. I pulled back, but remember, I pulled back by 5%. Everybody's risk tolerance is different. Don't be ashamed if you pulled more money out at the beginning of August and you missed out on this run. The point is, you didn't put all your money out. You had some money in there. Now, when I look at this and you look at the weekly, let's just take a look at the monthly, okay? The further you pull out on the chart, the better off you can tell the trend. What's this trend? It's up. It's up. This is 2020. That's COVID. Okay? That's 2022 when we were raising rates. You could have bought any time under this 9-day. Now, you're over the 9-day now. This month period of August last month, the open was 507. The close was 517. You got all the way down to 468. So did you want to buy it when it was at 468? You probably said, you know what? I don't feel comfortable buying at 468. You might have said at the open, I don't feel comfortable buying at 507. You might have said at the close, I don't feel comfortable buying at 517. Right now in pre-market, you're at 515. You're down 0.5%. August was pretty freaking good. And you look at the MACD on the monthly, and it's pretty high. Do you want to invest now? I would argue that you're probably being Bob, that we might very well see a pullback. Look at this over the last 14 years, okay? VOO, average September, minus 1.85. The mean change is minus 2.19%. You only win 38% of the time. It's the worst month. Okay, and you may say, well, that's VOO. That's the S&P 500. Let's go and take a look at the Qs. On the 4-hour, it looks a little weak. Algorithm still has you in. The algorithm outbeats buy and hold over the last 24 months. Again, the algorithm beats buy and hold for VOO as well. So, do you want to get out? I'd say no. I'd say if you're trying to time this, look at the Bollinger Bands. They're cinching up. They're telling us, hey, there's a move happening, but I'm not sure where. The 9-day, the short term, is looking like it's weak. The long term, the 200-day, is looking like it's pretty strong. The medium term, the 50-day, it's kind of turning over. It's not giving us a clear signal. The RSI, 54. The MACD, it's down at the oscillator. Let's go to the monthly, and let's see what the long-term trend of this is. It's long. The August, you opened up at 471. You closed at 476. You were up 0.96%. Okay, you were up almost 1%. Your low, 423. You probably didn't feel comfortable buying at 423. I would argue 423 was on the below the 9-day. So you could have dollar cost averaged your way in. Now, do you want to buy now? Well, let's take a look at the seasonality of the Qs. Over the last 26 years, September is the worst month. It's only rivaled by February, okay? But September has a mean change of minus 2.37%. I would argue you need to remain patient. There's a couple of things coming up this week with investor stuff. The Qs, it's incredibly high on the MACD. It's incredibly high on the RSI at 69. It's overbought. Doesn't mean that we don't have room to go higher. Just means you might want to, take a little time off. Doesn't mean that you want to sell out of the Qs. Maybe you take 10% of your Q stuff off and you say, you know what? I'll wait until we get maybe back down to 450. If we get to that 500 mark, maybe I'll just put that 10% back in and it's going to be higher. The 90% is still in there earning you money. So making sure that you understand the market and the market dynamics and the seasonality and the things that are coming up. You don't have to do this every day. You could manage this on a weekly or a monthly basis. Again, I would argue that probably for ETFs like QQQ and VOO, you probably want to manage those on a monthly candle. Because again, if we look at this on a monthly, the Qs, and we say, when would I have gotten out? I don't know when you would have gotten out. I don't know. There hasn't been a huge enough downturn. You could have said in December 2021, you know what? It looks weak. We didn't hit above the 9-day here in May. And you could have sold at 311, and then you could have bought back in at 254. Could have done that, but is that going to happen now? I don't think so. We're in a different market. Remember, this was during rising rates. Now you're looking at falling rates. So, I just think that you want to make sure that you understand charts and you understand what you're doing. And so in Trendspider, if you have your own charting program, fantastic. If you don't, Trendspider is available. And like I said, my algorithm beats buy and hold. So if you're averse to risk, maybe you just use the algorithm to try and trade. It's the top link here on Linktree, linktr.ee/daily stock pick. When you click that, you get here. The Labor Day promotion is extended. Only 1 day. 1 day left. Okay, 1 day. The enhanced is $54 a month. The standard's $53 a month. I would say for $1 a month, go with the enhanced. And if you're new to trading, if you're new to technical stuff, get the advanced. Okay, it's $82 a month. But it's unlimited one-on-one training from a product expert at Trendspider. They love training. I talked to Dan, the CEO, a couple of weeks ago, and I said, hey, am I okay promoting this unlimited one-on-one training? He's like, do it. He goes, we love training people. So again, Trendspider, it's on there. What you get is you get my 4-hour algorithm. And let's just go over the 4-hour algorithm for the ETFs. Okay, QQQ. You make 54% over 24.5 months, 54.5. If you bought and held, you made 49.2. So it's not blowing away buy and hold, but what it provides you is some type of sleep at night. You get some safety. Okay? Over 24.5 months, you don't have 100 positions. You're not trading in and out. There's 21 freaking positions. So it's not even monthly. 21 positions. Your average win is 7.66%. Now, let's look at VOO. VOO, you make 41.6% over 24.5 months. And again, it's 19 positions. It's not 100 positions. It's 19. So these aren't triggers where you're getting some type of daily alert that, hey, oh my God, I've got to get in there. It is nice and easily managed. So over 24.5 months, 19 positions, your average win is only 4.37%, but your average loss is 2.24%. So it protects you from the downside. It doesn't mean that you win 100% of the time. You win 63% of the time. The algorithm is fantastic. I trade with it. I use it all the time. And if you're using charts, maybe you want to look at this. Again, risk on, risk off. This is the chart from Trendspider. percentage of NASDAQ 100 stocks above their 50-day. This is the type of stuff you can do in Trendspider. You could set alerts on this. You can set this up in your Trendspider and say, hey, when we get up here near the percentage of stocks, 80% of the stocks are above their 50-day, I want to take money off. Okay? When we're down here near 30%, only 30% are above the 50-day, I want to start buying. Maybe you want to do that. You can set up a strategy in Trendspider to do that. It's fantastic. I like it. Now, this week, what do we get? We get the first major economic data report on Friday. We get U.S. government jobs, the August jobs report. Wall Street will also have to contend with seasonal headwinds as September has been the worst month on average for the S&P 500 over the last 10 years. Over the last 10 years, it's the worst month. Okay? Let's see. On top of that makes it the worst month in broad market. On top of that, the S&P has posted a loss in each of the last 4 Septembers, including 9.3% plunge in 2022. We're in 2024. That was just 2 years ago. But when you look at the monthly chart and you look at this, let's see, this was September 2022 right here. You look at that. That's a 9.11%. Okay, you opened up at 361, you closed at 328. And then October was a 7% increase. So October, November, and December look good on these indexes seasonally. So we've got a ton of information coming out. Tuesday, today, we have ISM manufacturing for August. That may have already come out. Wednesday, July durable goods and the Fed's beige book. Thursday, ADP payrolls. And then Friday, the jobs report. So you got all of that going on. This is, if you're looking to trade, and this is kind of the difference. I said on the video that I posted this weekend on my YouTube channel that I would make more money trading. Absolutely. Because if you're momentum trading, you want to do it between 9:15 and 9:45. I would say you want to do this actually between 6 a.m. and 9 a.m. Okay? Momentum trading, 6 a.m. and 9 a.m. is when all the momentum happens. When by 9:30, the market has decided, okay, which way I'm going. And then you can trade at 9:30 at the open as well. It's just a little bit harder. Trade on 5-minute candles. Directional trading, if you're looking for, hey, I want to determine the trend of the market, that's 9:45 to 11. You can tell by 9:45 where the market's going to trade during the day. Okay, if you're using candlesticks, sideways trading, 11 a.m. to 1 p.m. Now, if you're just looking to actually, invest, I would say between 1 and 4 is when you want to buy your stock. Because if the stock is taking a dump, you're going to see it. So there might be a better opportunity. Or by 4 o'clock, you might say, you know what? The candles look good. But this is just a good guide, best trading time. That should be your daily schedule. Now, let's talk about Intel, because I've said Intel is just a horrible, horrible stock. Well, you know what? We're going to open up this. Eventful August sees S&P plunge, then go into recovery in the market. This was a good good summary on, the Dow record close. This is a good summary of what August was. Number 1, consumer staples, plus 5.99. Real estate was number 2. Healthcare, number 3. Financials was number 4. Utilities. Where was tech? Tech was number 9 out of 11. Number 9 out of 11. So my portfolio didn't blow it away. Consumer discretionary, that was number 10. Remember, I got a bunch of XLY. I sold out of it. XLE was down 2%. So what's going to happen in September? I don't know. That was an interesting one. I did get and I posted this, I think, in the newsletter, but FXGIX. Let's go to Seeking Alpha, and I'm going to pull this up. I was looking at the Fidelity Reddit, subreddit, and I noticed FXAIX, I think it is. Yeah, FXAIS. This is the Fidelity 500 Index Fund. And so there were people in there, oh my God, this is the greatest thing ever. This is the most fantastic. And it's, expense is like 0.03. Yeah, 0.02. Okay. So I went into charting and I said, let's select the symbols. And I'm going to get rid of this. And I'm going to say, you know what? I want Vanguard because that's the one that I think for the long term you should be buying. Again, SPY is a little different. SPY, I think, you underperform a little bit, not much, but you do underperform a little bit. And let's look at the total return. Okay. FX, remember, VOO has an expense rate, I think, of 0.005 or something. It's a little bit more than FXIAX. So it's a little bit more. Do you make more money? Well, over 1 year, FXAIX is up 25%. VOO is up 26%. Then you go 3 years and 29% for FXAIX versus VOO. Then you go 5 years and it's 107 versus 109. Then you go 10 years and it's 232 versus 237. VOO beats it. So if 5% of your money is important to you over a 10-year period, you're going to do VOO. So the expense ratio, my point is the expense ratio, VOO has a 0.03 for expense, but the performance is better in VOO. So I thought that was important enough to point out that when you see somebody say on the internet that, hey, oh my God, this one is making me a ton of money, I want you to make sure that you're going in and choosing these things. And you can choose Seeking Alpha. If you have a comparison chart site, don't worry about it. But if you want to do these types of comparisons for ETFs or anything in your portfolio, it's the second link right here. Okay, the second link on Linktree is Seeking Alpha Premium. You get a $25 discount and a free 7-day trial. But again, this is how I use it a lot. It is to compare. When I see somebody say, oh my God, this is the best thing, I just go and do a comparison chart. So start looking at that stuff. Now, Intel moved crazy on Friday. Intel was up 10%. Okay, it's not much. It's like $1 or something because it's only at $20. But it was because they said, hey, we may spin off our foundry business. And that could unlock a lot of value for people. So Intel, the stock essentially went up because while people have given up on Intel chips, Gelsinger has been hanging his hat on this foundry business. It's a trade. Just understand it's an absolute trade. Good companies with good products, with good profits and good management. Gelsinger hasn't proven himself to be a good manager yet. He has made false promises over and over again. So when people ask me, is Intel a good trade? I still own a portion of it, a portion of my original buy at 46, by the way. I may dollar cost average because it is a good trade. Intel's an interesting trade. It's interesting because it's got news and it could move. And of the chips, this is the cheapest one. And it's got gaps all the way up. But the 4-hour algorithm right now, it got you in at 1947. Now, if you want to trade this one, I would say something like the 4-hour algorithm is good for you. 7.4% is what you make over 24 months, okay? 24 months, 7.4%. You only win 39% of the time. I would say 7% isn't worth it for me because there's way better stocks that perform on the 4-hour algorithm rather than Intel, but at least it protects you from a little bit of downside because if you just bought and held Intel for 24 and a half months, you're down 35%. So again, find your kind of move here. But yeah. Intel trade. I do want to bring up one of the things that I kind of typed in the paid newsletter this weekend, and I think I made it free. I don't know if I made it free, but it's important to get out there. The take on the Apple and the Mag 7, I think I included it. If September is investment lows, and we can go and take a look at Apple in particular, because September hasn't been good to Apple either. Look at Apple. They have their iPhone event in the month of September. They have their iPhone event, and we'll go over this. There's an article that says, iPhone events, it's sell the news. But here's September, the worst month of the year for the last 26 years for Apple. The mean change was down 3.16%. Does this mean you sell into September? Take some profits. But an interesting take on this market in particular. And remember, Apple is one of the top three largest market caps in the stock market. It's NVIDIA, Microsoft, and Apple. But an interesting take on it was September people may be coming back in big. And that will drive the market back up. There's plenty of cash on the sidelines in money market accounts. And as these rates go lower, these people may be more willing to take some risk and put it into equities. But the thought is that if they've been in money markets and they've been happy getting 5%, they're probably not going to load into NVIDIA. They're probably not going to load into Microsoft. They're probably not going to load into Apple. But they probably will buy ETFs. And the percentage of ETFs, like say VOO, if you go and look at VOO, and we just look at the holdings of VOO, say they're listening to my podcast and they're saying, you know what, VOO is a good one. Well, what's the top 3 holdings of VOO? It's Apple, Microsoft, and NVIDIA. And so because those are the top 3 holdings, you will indirectly benefit. The stock price will indirectly benefit from that. It's an interesting take. Okay? Interesting take. I thought it was worth looking at. Netflix to 900. Before we go into Costco, I didn't write down this because I didn't look for a story on this one, but Netflix has been holding that 700. It doesn't have its support yet. But make no mistake, it doesn't have its support yet. That's resistance right there. That's not support, but it seems to be holding. Now, let's see. It was Pivotal Research came out on Friday. They moved their price target on Netflix to $900. $900. You can see right here that, we've been sitting there at 700 and it's pushed up there a couple of times, but the MACD is super high. Now, when somebody pushes their price target to 900, is that something that you want to take a look at? It's an interesting thing. Pivotal comes out as Netflix most bullish. There we go. And I'll put this in the newsletter if you want to read it. But it's an interesting take on 900, and they support it with numbers. And they say, hey, the research that we've done indicates that the ad tier is growing more, that they're working on the password issue. But the average price target is $694. So while this has moved it a little bit, it hasn't moved that average Wall Street price target. It's the high on Wall Street, but it still hasn't moved it above. You're still trading down. I would still say if you have Netflix, I would say start trimming over 700. Doesn't matter. You could buy it back at 720. But if you bought this at 350 and you've doubled your money, start taking some profits. Because again, September is a week for the seasonal for this one, but it's not weak for Netflix. 64%, then 68%. You're looking at some of your best months coming into March. So I'd take some profits, maybe buy, sell over 700, and then buy on some of the weakness, because I do think that we start to see weakness in this. Right now, the algorithm got you in here August 7th at $620. That's a good profit right there. And the algorithm will get you out at some point in time. The RSI is coming off of oversold territory. When it got, the first time it hit over 700, the RSI was at 77. Okay, it went to 77. It's pulled back. The RSI is at 63. The MACD falling down. I like the stock. I just think there's better stuff out there. Insurance had a huge August, by the way, and I'll put 5 of the ones and a couple of ETFs. Long term, what was interesting is the ETF that I was talking about that I heard, and I haven't done this, so I'm just doing this live. Let's see, IGK. No, it's IAK. Insurance ETF. This is the iShares Insurance ETF. And when you look at the holdings on this one, you can see Progressive, Chubb, Travelers. Those are the stocks that I'm going to, but what I wanted to point out was this. If we select symbols and we take out the S, we'll put in VOO just to have it. But what I want to do is XLF, okay? XLF has been a pretty good one. And insurance companies are considered banks. So let's compare that, and let's compare it against VOO to see which one does better, okay? So VOO is 25%, XLF is 30%. This is just 1 year, 35%, and IAK is 40%. When you look at 3 years, okay, IAK is up 57%, VOO is up 24%. This one still looks very, very good. And if your insurance rates are going up, as mine are, this might be an interesting play. So I'll put that in the newsletter. Just some of the insurance companies that I saw that they were saying was a good one. Costco, the retailer's treasure hunt, a potential stock split are seen as catalyst. I have said Costco, and I even put it in the newsletter. It is part of the core portfolio, but I will tell you, Costco for me, too expensive. $8.92, you're trading at $8.91. Algorithm probably will get you out here soon. I just think it's too expensive. But again, if they do a stock split, and the treasure hunt is from stronger brands and apparel, consumer durables. It's doing really well. And if you're a Costco member, that treasure hunt might be something that you want to look at because it's actually pretty freaking good deals. So that's an interesting one, Costco, but I still think it's too expensive. I'd rather see you buy Walmart, and Walmart's still expensive too. Target is the probably the bargain of basement, but they still have to turn things around. But the last quarter was really good. Catalyst Watch, August jobs report, Intel event, Broadcom earnings, Costco sales, blah, blah, blah. You do have Costco sales, Earnings Hub. We've got a couple of earnings coming up. You got Zscaler, GitLab. And then on Thursday, you have Broadcom and DocuSign are the two, and IoT, which Josh Brown really, really likes. This one could be interesting. 3 cents, and they're expected to report 1 cent. Might be an interesting one. But this Catalyst Watch, I like this. As a premium member of Seeking Alpha, you get this on Fridays. Every day Friday, I think at 3 p.m. it comes out. Let's see, Friday at 3 p.m. it comes out. And it just puts your day. It sets you up for the next week. I really like it. Now, this clip from the Compound, fantastic clip. And this says it perfectly. This says it, this literally says it perfectly. I couldn't put it any better. The market is confusing right now. I'll include this in the newsletter. We may be going for a soft landing that nobody expected. And I think her name is Gunchin from the Wall Street Journal. She's fantastic. She puts it out there. I really like her. I follow her on Twitter. Now, Apple's event this week. We talked about Apple being soft in September. Huawei is to unveil new phone hours after Apple's marquee lineup. So essentially what's happening is this Chinese company, Huawei, who is rivaling selling cheaper phones in China, and that's what's hurt Apple in China sales. They're going to announce their new phones hours after Apple announces theirs next Monday. The event next week, it could be a sell the event news. And this article goes over that. And I wanted to read you the specific quote from this author. Historically, the iPhone launch event has been a sell the news event, with Apple slightly underperforming the market the day of the iPhone launch, and then only modestly outperforming the market in the 3 months following the event. And Apple's expensive. Make no mistake about it. Right now at $230, it is expensive. I said on Friday or last week at some point in time, Apple may be one that you want to take out. It might be one that you want to take out. But again, Apple's Glow Time event, Apple integration of the stuff. This is it's all good news, but it's not going to be available at launch. A lot of this stuff isn't going to be available at launch. So I will be upgrading to the iPhone 16. I am on a 13 Pro. It makes sense. There's a ton of people out there doing videos this weekend. Does it make sense to upgrade? If you've got an iPhone, I would urge you to look at it. As an Apple shareholder, I would urge you to upgrade. There's some shameless plug there. Now, Supermicro. Let's talk about this because Supermicro on Friday said they don't expect any material change to fiscal 2024. Okay? And then you have this analysis. Supermicro rebound potential after Hindenburg report. So Seeking Alpha analyst Giannis puts a buy on it. It's down 1.9%. We can look at the chart. I would say you probably want to wait to buy this one. It is still weak. We've got the split coming up on September 30th. If you're looking to get into this one, I would say don't try and time it. And the reason is when you go back and you look at the longer term stock chart, okay, we are weak. When you look at a weekly, last week's period was down 28%. The RSI is at 37, could go lower. The MACD's just at the oscillator, could go lower. If this one is going to rebound to the 500s, I would just say wait. You can buy, if it's going to 500, it's going to go to 600. And if it's going to 600, it's going to go to 700. The average price target, again, you can take a look at this on Seeking Alpha, but the average Wall Street price target is $877. They didn't bring it down. The short sellers didn't bring it down. And then SMCI actually, delaying their filing, they didn't bring it down. So I would urge you, do your research on this one. I am sticking to it, but again, I'm playing with house money. Google. Just a support resistance flip on a multi-year breakout zone until proven otherwise. This is the weekly chart, okay? We talk about old resistance turns into new support. So where was that? That was at 155. You're trading at 165. Again, until proven otherwise, this looks like it's support. So if you're interested in Google, maybe an interesting one. Now, Beth Kindig. I follow her on Twitter, but I saw this from Benzinga on Instagram. She recently, and I didn't see this, but I'll look up her stuff, but I'll include just this Twitter link or Instagram link. She says NVIDIA set to reach $10 trillion valuation with fireworks again in 2025. Okay. We talked about how NVIDIA is probably, their market cap right now is 2.93 trillion. There are only 3 companies that are even close to 3 trillion. And that is Apple, Microsoft, and NVIDIA. Those are the only 3 companies. So getting to 10 trillion is going to take an enormous lion's share of the capital expenditure. She thinks it does. But I will argue that most of these people that say things like this say this so that they can get on TV. Okay? That's it. I don't think Beth is lying. I think her numbers prove it out that it could get there. But right now, the average price target is 148. To get to $10 trillion from $3 trillion, that would be close to a $400 or $500 stock. Okay? It's not, I don't think it's going to happen. I think she's saying this stuff to get it out there. I think at some point it could happen. But I think NVIDIA right now, if you're selling at the 120s, I think you're okay. I think if you're buying under 120, I think you're okay. I am holding. I am not selling. But the catalysts are they're gone. The catalysts for NVIDIA, they happened. They're going to come back. If we want to look at NVIDIA stock and we look at the seasonality of this one, right now it's trading at 114. The market just opened. If we look at the seasonality of this one, we're not heading into a great month. November's the great month. October, it's just an average month. November, you start to see a ton of stuff. And then, January is when you want to buy this stock. It's down 40%. If you want to buy a long-term buy and hold stock, you buy when it's seasonally weak. So NVIDIA to trend 10 trillion, I'd say it's a folklore. Insider trades, notable buy and sells by significant shareholders. You can see GBTC, PBF. There was one, PanW, Berkshire Hathaway, BAC. But there is one that I want to point out, and that's Energy Transfer, okay? Energy Transfer we've talked about. This is one where the CEO was buying hundreds of millions of dollars of stock at like $15. And you've got this one all the way up to 16. It's trading at $15.97 right now. And if you go over to FinViz and you go to ET, you can scroll down here and you can see all the insider buys. The insider buys, August 23rd, he just bought, $313,000 worth? That's not a ton, because when you look at Warren Kelsey, this dude's bought $47 million worth just a day before, okay, at $15.68. If you don't think this dude bought $13 million back here on November 6th at $13.53. He bought another $13 million. He doubled down at $15.68. $47 million worth, okay? This article, great. If you want to follow insider buys, you can do it. Insider sales. This article points out the most recent ones. Now, which defense stocks are good? I'm not a defense stock guy. I'm a large cap tech guy. This is why I like Seeking Alpha, because it will go into specifics about what's good and what's bad. This is Seeking Alpha analysts. And so they asked, a bunch of people who are defense stocks, which are the most attractive ones right now. This dude says General Dynamics, RTX, Lockheed Martin, Northrop Grumman, And they give reasons why. If you're into defense stocks, you can read this article. I'll include it in the newsletter. Broadcom. I own this one. Their earnings are coming up on Thursday. We know two segments of this business. They're AI and non-AI chips, okay? NVIDIA killed it on the AI side. So Broadcom most likely will kill it on the AI side. And then we know from the non-AI side, Marvell killed it. So those two, I think, set this stock up pretty well. But it's expensive. Again, 37 times earnings for 34 on the forward. The gap at 1.91, that's the forward gap. It's not great. I mean, I'd rather have it at 1. Their growth, 21%, but the sector's only growing at 3%. You know, if you go over to Earnings Hub and you look at Broadcom, they reported $10.96 per share, okay? They're expected $1.08. $1.08. So there was some crazy stuff last time. You can see the earnings per share right here. They were expected, $10.84. Remember, they went through a 10-for-1 stock split. So that 108 is actually 1080. So it's down from that 1096 to 1080. That was the 10-for-1 stock split. But the revenue, $11.61 billion. If they grow it, I think that's the best opportunity. Now, if we look at the chart and we look at the 4-hour algorithm on this one, I'm in this at about, I think, 130, 140, somewhere in that neighborhood. But this one, their earnings are coming up. Algorithm just got you out with an 11% gain. 11%. Now, if you trade the algorithm, you make 84% over 2 years. Okay, 24.5 months. If you just bought and held, you're up 200%. Even though the algorithm wins 48% of the time and your average win is 10.34, performance of buy and hold beats it. Does that mean that you just buy and hold? No. It means what's your risk tolerance. If you want to prepare yourself because it's expensive, Broadcom is expensive. We just went over this. They make 74% gross profit margin. That's huge. That's enormous. But it's an expensive stock. And if you look at the weekly, it has had trouble getting up over this 170 mark. The 174, 175. It's trading at 159 right now. It's down. That 160 mark, it's down 2%. Look at the MACD, how high that is. Look at the RSI. I don't know that I'm super comfortable buying into this because, again, the 4-hour algorithm just got you out with a nice 11% gain, but I'm comfortable holding it. And the reason is because of that performance on this one, and I'm in at a much lower price. If it dips down, I may just buy more. And that's my personal opinion. But again, if you like Broadcom, you can do this. This I thought was interesting for everybody who wants to know that AI is going to end the world. We now have crypto bots, crypto AI, the first AI to AI crypto transaction. I thought that was huge. Do with it what you want. Crypto is, Coinbase is down 2.3%. GigaCloud, GCT, I got out of this, but it's interesting because they announced a $46 million buyback. That's huge for a company that has some type of short sellers and they're, doing some financial manipulation to announce a buyback. This puts it kind of back in play in my mind as a trade. Again, your average price target is 52.15. There's only 6 analysts that cover it. So be careful of that price target. But it's up 3% today on a day that we're down 1% on the NASDAQ. GCT, you're seeing this, this one, it's up 3.7%. Again, the 4-hour algorithm makes you 170% over 24 and a half months. If you bought and held, you lost 37.3%. I'm not saying that this doesn't have more downside to go. I'm just saying at $20, that kind of looks like it might gain some support. I would wait for the algorithm to tell you to get in. It hasn't. Okay, the algorithm makes you 170%. So I thought that was interesting. Some other earnings that are coming out on Earnings Hub that are interesting. After the bell, we have Zscaler and GitLab. I don't know anything about this other than, Zscaler. They're expected to report less, and they've blown it away each time. This one could be an interesting one. The stock chart just doesn't seem to give them any kind of, favor. And you've got a gap up here from the two earnings ago up to 241. It's trading at 199. If you look at the weekly on this one, you're just kind of hovering around the 200-day. Could it set up for a nice golden cross of the 50-day up to push this back up to 251? It could. If we go and look at this one and see scalar from a Seeking Alpha, it's a strong buy. There's 42 analysts cover it. They say 231 is the average price target. The quant says it's a strong buy. The valuation isn't nuts. Again, it's a 67. But you look at the PEG ratio and it's 1.91. It's not crazy. Their growth is explosive. They're growing their revenue 37%. 37%. Levered free cash flow, they're growing by 33%. Profitability, 77% profit margin. Momentum, it's all good except for the 6-month performance. So the revisions, 37 up, 0 down, 39 up on revenue, 1 down. So this one, I think it's interesting from a 4-hour standpoint. The 4-hour algorithm makes you 15% versus the buy and hold makes you 17% over 2 years. Now, when you look at this, that 171 price, you're up 17%. Your average win is 15%. It's going to be a risk. I like that gap up there. I may play it, in my Webull account during the earnings, but it's definitely an interesting one. GitLab is the other one, and I know less about GitLab, but they reported 3 cents. They're expected 10 cents. That's a big jump. I'd be a little bit scared of that one, but again, if you know more about GitLab, then kudos to you. Now, social request, Damon. I found some interesting ETFs that could work in the intermediate term since the market's looking for yield. In preparing for rate cuts and safe bets, with it being an ETF of 100 or 500, with the downside protection of covered call strategy. There is, and I provide this when you sign up for Trendspider, there are covered call ETFs, okay? I have a full list of covered call ETFs here that you can trade on and scan on, okay? What these are high dividend paying stocks. So for instance, I guess QILD might be the biggest one against the Qs. And you can see how this one, again, when they pay a dividend, it comes out of this. And we can look at QILD here in Seeking Alpha. It's a NASDAQ 100 covered call strategy. And the yield is 11.52. Okay, the yield is 11.52. And when you go, that's what you're doing to get into this. It's 11.52. Okay, annual payout of $2.06 versus it trading at $17.96. 5-year growth rate, down 2.9%. So it's a covered call strategy. That's all this is. And Damon brings up a good point. If you're interested in something like that, go and have at it. If you're interested in protecting yourself while we go into this downturn, potential seasonal downturn, then that's something that you want to look at. Now, scans, PanW, Palo Alto Networks, I have. This one looks like it's got another leg up. If the RSI agrees, 62. I mean, this one down 0.37%. I'd be a little bit concerned on that one. Amazon. We have a buy in Amazon at 178. Just got you out with a 1% gain, gets you back in here at 178. I would say buy that knowing that it's going to be a long-term buy and hold. 188 is resistance. When you get to 200, Bezos is going to sell a ton of stock. MPC, Marathon Petroleum. This one is an interesting one. Again, the earnings are behind us. So all you're really betting on is the price of oil. Price of oil went down today, so we have SCO as a cross-up on the energy port. But I wanted to bring this up because this one's interesting because it's down below its 200-day, which is moving negative, and it's definitely providing some resistance. So if you buy here at 173, understand that 177 may be a resistance point for you. It's an interesting one. The algorithm makes you 24% versus 68% buy and hold. If you look at a long term of this one, again, you point, this one is settling in here at about 170 with the MACD on the oscillator, with the RSI in no man's land of 50. So I thought it was interesting. There's a long list of scans today. So if you're interested, again, sign up for the newsletter. Couple of specials to just go over real quick, just so you know. Again, Trendspider is the number one. They're having their Labor Day promotion, which was extended. The number two is Seeking Alpha Premium right here. And this is, free 7-day trial, $25 off. You saw how much I use the quant strategy, how much I use those articles to try and see things. I think you'll benefit from this one too. The third one is Alpha Picks, and you get here's Alpha Picks. They're going to have their new pick today, and I think it comes out at noontime. I don't exactly know what it is, but what this portfolio is are two stocks, one on the 1st and one on the 15th. They release a full analysis of why they picked the stock. So you get a full article on why they picked the stock. And it's data driven, okay? This is fundamental. This isn't by the chart. You can determine when you want to buy, but the key point is they alert you when to sell. And so, and I usually don't like this. Like I said, bull markets will make anybody look good. And will make any portfolio look fantastic. But when you beat the S&P by 114% versus the S&P at 38%, it's a portfolio to look at. And the reason I say that is because 114% over a couple of years is unbelievably fantastic. Unbelievably fantastic. So my portfolio hasn't performed like that. And most of these stocks are stocks that I would never have picked. Super Microcomputer, they had you in November 2022. Okay, you get access to the entire portfolio on day one. The performance is unbelievable. And you can decide when to buy. You can decide when to sell yourself. It's just, hey, here's the portfolio. Here's why we picked it. And they constantly give you portfolio updates. Like, Sprouts was a pick. And they go, Berkshire was a pick back in, I think, February. And they go over exactly why they like it. So again, it's based on the quant rating, and I think it's fantastic. Now, we're looking super weak right now. VOO is down 0.72 as I record this. QQQ is down 1.1%. So, again, seasonality might be taking over. If the jobs number comes out and it's a fantastic jobs number, we may be in for a soft landing. That's going to, again, we are in a market where good news is good news. So if you have any questions, hit me up. Oh, the other one that I want to make mention of is Webull on this link tree. Webull is just so good. I mean, the 5th link is my newsletter, but Webull is just so good. So if you want some free stocks, sign up, deposit like $500 and just start trading out the wazoo. You can even do options. I mean, again, if you have a separate account, what's nice is you can blow that account up. Consider it entertainment. That's what I do. I have that separate account so that it's entertainment for myself. Okay, I'll talk to you guys tomorrow. See you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.